Welcome to Business Live with me, Ian King, with half an hour of the latest news from the markets and business. The Bank of England said this morning that the UK's banks would be resilient in the event of a severe deterioration in the global economy and financial markets. Nearly 1 million mortgage holders around the country will see their monthly repayments jump by £500 or more in coming years, the Bank of England has warned. But despite this sharp increase in the mortgage burden, the bank says the number of households with high mortgage burdens remains well below the 2008 leak. Well, publishing the results of its latest stress tests on the sector. The bank said major lenders have the capacity to support households and businesses through a period of higher interest rates, higher global inflation, recessions in the UK and around the world, materially higher unemployment and sharp falls in asset prices. The bank also said the UK economy had so far been resilient to interest rate risk, but repeated recent warnings that it will take time for the full impact of high interest rates to come through. The lenders stress tested were HSBC, NatWest, Barclays, Lloyds, Standard Chartered, Virgin Money, Santander UK and Nationwide Building Society.
The increase in interest rates and market volatility over the past 18 months has, as we've seen, created stress in some parts of the financial system. And we did, of course, in March have the failure of three mid-sized US banks and Credit Suisse. That caused a rise in risk premium and volatility around March. But our judgment is that the impact of that stress in March on the UK banking system was limited, and that since then, globally, market risk sentiment has stabilised. And more broadly, the UK economy and financial system have so far been resilient to interest rate risk.
The health insurance and healthcare provider Bupa is providing financial support, marketing expertise and networking opportunities to 18 startups. The support is part of the group's Disruptive scheme, which was launched 2 years ago with the aim of helping develop technologies that can make the healthcare sector more efficient and sustainable. Joining me now is Inaki Erenyo, Bupa's Global Chief Executive. Inaki, great to see you this morning. What sort of businesses are you supporting?
Thank you very much, Ian. So we are supporting a big variety of businesses. All of them, they have a relation to health. So, for example, if I can tell you just a couple of examples, one of the businesses we are supporting is called Sage Tech Medical. What they do is they get rid of all of the volatile anesthetic agents, and they do that in a recyclable way, which is great. For example, we are also supporting a company called Cassava bags. They do bags that they get dissolved in water. So yeah, and many more to come.
And will you be taking equity stakes in any of these businesses?
Yeah, so we have a variety of ways of working, helping them. The main one is they get to work with the Bupa businesses. For example, there's another company, Upcycle Medical. They do recyclable clothing for hospitals. They are already working with us. That's the main help. But yes, we provide funding and we provide partnerships. Yeah.
How do you think the healthcare industry globally shapes up compared with other sectors in terms of its use of sustainable technologies?
So we need to say, I mean, the context of this is healthcare by itself. We are responsible of 4% of the carbon that is of the emissions in the world. So that is something. So we have to do something. We probably need to accept that probably, I mean, all of these sustainability strategies in healthcare, we are now really moving on. And for us, it's part of our purpose. It's not even our strategy. It's purpose of the company. We have a solid plan, and we want to make it even bigger.
So what made you want to launch this program?
The need to learn how to construct health sustainable solutions for healthcare, because we believe the connection between health of the planet and health of people is very clear. It was even more clear after COVID, and that is the place in where we want to be.
Do you think big established corporates like Bupa have things that they can learn from these startups?
Oh yeah, I mean, unbelievable. I mean, absolutely. So, and this is the way we work with the startups. We put some Bupa people with them. They form something we call a squad. This morning I was visiting all of them. You cannot differentiate. I mean, whether it is a member of the startup or Bupa employees. I mean, they learn to be more quickly, working more agile. But on the other side as well, the startups, they learn from the big corporate employees. They learn how to navigate into this world. They learn from them. So yeah. So it's a nice symbiosis.
And more broadly, obviously, inflation is everywhere right now. How are you navigating the business through that?
Well, that's not, yeah, exactly. That's not an easy way. You know, yeah, we're trying, as you say, to navigate. So it depends on the place of the world. Yeah, but there is, inflation is affecting the healthcare costs for sure. Yeah.
Obviously, COVID has left a long legacy throughout healthcare systems around the world. Are you seeing more demand generally, or is it concentrated in certain parts of the world?
Well, you know, one of the things that is happening in, as you say, in every part of the world. So, I mean, the public systems, the health systems after COVID are struggling, and that is happening. So the thing here is how private operators, we can help the process. We believe we can, and we will.
Well, I think you must. I mean, I think you put on something like 1 million health insurance customers last year and 2 million in healthcare provision. Clearly, there's massive demand out there.
Yeah. So we're seeing that. We're seeing that. But to be honest, we're seeing that not only in the UK but in other parts of the world, as you suspect. But that is something that that has to, at some point, probably ideally stop, because there is a natural rhythm. That is the good thing. We share patients with the public systems, and that, as I said, it has to be a collaboration, and that collaboration has to happen. We want to collaborate in this regard.
And separately, you just bought a chain of dental clinics in Brazil. Clearly, that's a market you quite like.
Yes, we like. We have dental clinics. Well, in the UK and in many other parts of the world, we like that industry. It's part of our it's of our present and our future.
And Naki, it's great to see you this morning.
Well, thank you very much. Thank you for having me.
Thank you. Some other business news stories for you now. And the pub operator JD Weatherspoon said this morning that 22 of its pubs remain open for sale, having sold, closed or surrendered to the landlord 28 other outlets. Weatherspoon insisted the disposals had not been a money-raising exercise. It said 15 of the outlets let go had been leaseholds where the lease had expired or where the company had exercised a break clause in the lease, while most of the others had another Weatherspoon pub nearby. The company, which currently trades from 827 sites, said that profits for the year were likely to be in line with city expectations. I can tell you, shares of Weatherspoon are more than 10% ahead right now. Page Group has become the latest recruitment company to warn of tough conditions. The firm, which employs more than 8,500 people in 139 offices across 37 countries around the world, said that its gross profits in the 3 months to the end of June were down 6.2% on the same period a year ago. It blamed lower levels of both candidate and client confidence, resulting in delays in decision-making and candidates being more reluctant to accept job offers. Well, the biggest drop in gross profits was in the Asia-Pacific region and in China in particular. Now, the horse meat scandal a decade ago highlighted the importance to companies of having full traceability in their supply chains, and the rise in fraud and counterfeiting ever since has only served to emphasise that. Well, Oritain, founded in New Zealand, uses forensic and data science to provide data-driven insights on the true origin of goods and commodities. Today, the company, whose clients include Primark, Nescafe and Lacoste, announced it had raised $57 million in a Series C funding round led by the venture capital firm Highland Europe. Well, joining me now is Grant Cochrane. He's founder and chief executive of Oritain. Grant, good to see you this morning. What are you going to do with the proceeds?
Yeah, hi Ian. Thank you for having me. So we've raised $57 million and it's primarily going to expand into other verticals. So products such as wine, red meat, dairy. So expand to go faster. There's a lot of tailwinds in ESG. We're seeing more and more focus on ESG. So now's the time to go faster.
So how do you use forensic and data science?
Sure. So the original hypothesis was to use forensic science, so the science came out of the criminal forensic field, to prove the origin of products. So what we do is we verify the origin of products by testing the naturally occurring properties within it.
Right. And have fraudsters raised their game? I mean, obviously, you're using technology. They must be too.
Yeah. So the beauty about what we do is that the fingerprint cannot be mimicked. So if you look at other solutions, such as blockchain or normal traceability, it's only as good as the weakest link. What we do is we use forensic science to authenticate the data.
I'm very interested that you're going into wine in particular. I mean, that seems to be an area where there's a lot of question marks now about supply chains.
Yeah. So look, I think wine is a really interesting use case. The provenance, the terroir is really important. And, for someone like me, it's hard to tell the difference between two wines. So using forensic science is really powerful. The power of the science is it can be used in multiple different products. Can be used in fashion, can be used in leather, can be used in pharmaceuticals. So yes, very, very applicable.
Well, I mentioned some of the clients that you have. Do you tend to work for people on an ad hoc basis when they call you in and they think there's something wrong with their supply chain, or do you prefer these sort of longer standing arrangements? Yeah,
so no, it's very much a membership type model. We don't do the one-off testing. It takes a lot to build these fingerprints and to provide the service. So we've got long-term relationships. We're delighted. I think one of the great metrics of the company is our client retention rate's over 95%. So once people work with us, we add value to them.
I'm asking you to generalise massively here, but with all the tests that you carry out, how often would you smell a rat? What's the sort of proportion?
You'd be amazed. So maybe 15–18% of the time we will find problems in supply chains. It is incredibly prevalent, yeah.
That is stunning.
Yeah. And in the day of ESG, like ESG is such a focus. With regulation, so the EU deforestation regulation, it's making people prove they know where their products come from. Deforestation, labour use, so it's not just counterfeit. And
briefly, Sir John Key, former Prime Minister, we've had him on this programme in the past. He's on your board. How did you get him involved?
Yeah, he's also a former currency trader like myself. So Sir John is incredible. He's on the board of Palo Alto, ANZ and Oritain, so we're delighted with the company we keep. He's been an incredible help for us, particularly in the capital raise. We were really fortunate with our advisor, BNP Exane, and we managed to get a brilliant partner with Highland, who are really expert in taking companies from our size to their full potential. So, no, Sir John is a real asset.
Excellent. Well, send him our best. He's a great guy. Grant, good to see you this morning. Thank you.
Thank you, Ian.
Well, the oil price rose sharply as investors focused on the weak demand outlook. Again, it's held on to those demand gains today. I should say supply outlook there. Currently, it's trading at roughly its highest level since the 2nd of May right now. Brent crude a barrel will set you back $79.39 a barrel. On the equity markets, Wall Street's gains last night were followed by mixed trade overnight in the Asia-Pacific region. The low light, if you want to call it that, in the top left-hand corner of the screen, the Nikkei in Tokyo, which hit its lowest level for a month. A strength in the Japanese yen hit stocks of exporters. Well, in Europe, the situation right now is largely positive. All the main continental European indices in positive territory right now. Talking points this morning include the French defence contractor Thales. The shares up 2.5% in Paris on news that it's to buy the cockpit communications supplier Cobham Aerospace for $1.1 billion. Well, here in London, the FTSE 100 is also in positive territory right now, currently more than 1% higher. That's a broad-based rally led by the oil majors, Shell and BP. Both of them have added some 18 points to the index on their own. All the banks are also trading high as well, as you might imagine, on the back of those Bank of England stress test results. There are not too many blue-chip fallers to mention, but International Airlines Group, the owner of British Airways and Aer Lingus, of course, that's off 2.5% on broker comment. Outside the FTSE, well, JD Weatherspoon mentioned them a moment ago, shooting out the lights. The shares up 10% right now. Well, the publisher Future, mentioned them a day or two ago. They're ahead 5% right now after receiving a push from one of the brokers. To the downside, the estate agency firm Winkworth is off 1.75% following a modest profits warning. On the foreign exchange markets, well, the pound remains close to the 15-month high that it hit yesterday on the wage inflation data. It's off roughly 0.1% right now against both the dollar and the euro. The single currency, meanwhile, up 0.1% also against the greenback. Well, joining me this morning is Victoria Scholar. She's head of investment at Interactive Investor. Victoria, good to see you this morning. Let's start with the bank stress test results, because, I mean, really, the Bank of England has let them pass with flying colours here.
Yeah, that's right. And it's clear that investors are cheering this, judging by their share prices, which are largely in the green today, although the wider market, of course, is also higher. Essentially, the results of the stress test means that the central bank believes that they are able to withstand much tougher economic pressures than the current conditions. And it means that banks can support customers who are potentially facing difficulties on the back of rising interest rates. But the central bank did say that 1 million UK households are going to face more than £500 of extra mortgage costs by 2026. And the governor, Andrew Bailey, talked about consequences from increased interest rates, as we all can feel already. But he states that this is exactly why they are raising rates, to try and create those consequences and try and curtail economic activity and in turn help prices to come down. And there was also talk about the lessons learned from Silicon Valley Bank and the collapse there. And there were also some comments about the state of the UK economy too, which actually the central bank concluded was pretty resilient, although it did talk about the potential read across from rising interest rates, particularly on the most indebted businesses, as well as buy-to-let landlords and consumers as well.
Now, what about Weatherspoons? I mean, the share price has been under a bit of a cloud over in recent times, but I mean, Tim Martin's still buying shares in the company, of course, and yeah, he's sitting on a nice profit this morning.
Absolutely, like you said earlier, up more than 10%, and that brings its year-to-date gain actually to about 60%. So that's even after that turmoil that we've had more recently. But to put that into a broader context, the stock had a really tough time last year, caught up in those headwinds around rising interest rates and inflation. But it looks as though demand still remains robust. We know that fear is pretty resilient amid economic storm clouds. Also, there's the fact that energy costs are finally starting to come down. And then it benefited as well from those extra bank holidays around the coronation, Easter, and those extra holidays in May too. But it's not out of the woods. You know, it's still dealing with those pressures from wage inflation and food and drink price pressures too.
Absolutely. Well, one sector where there does appear to be a few headwinds is recruitment right now. I mean, Page Group, only the latest really in a number of these recruitment consultants. Obviously, Rob Walters we heard from last week. It's not a good picture for these companies.
No, a very similar message we're hearing from both companies. Page Group reported that its second quarter profits were down, and it is expecting full year earnings to meet expectations, but it really highlighted those challenging macroeconomic conditions and the political uncertainty as well. And ironically, it's actually reducing its headcount and has been in the second quarter. But I thought one interesting part from the report is the fact that we are seeing that businesses continue to prioritise the temporary working market instead of hiring fixed-term workers on long-term contracts that will add those fixed costs, permanent staff essentially. So that seems to be a trend that's appearing more and more amid these headwinds. And then geographically, we saw that Europe and Middle East was holding up okay, but the UK and Asia and the US has been really struggling. Offsetting even weaker performance, though, has been these worker shortages that we know about pretty well, and also the high level of vacancies. So all in all, a bit of a mixed picture, but there's no doubt that recruitment is an industry that ebbs and flows with the economic cycle.
All right, Victoria, we're out of time, I'm afraid. Good to talk to you this morning. Thank you. Still to come here on Business Live. Why 2023 could see a record-breaking summer for Britain's seaside economy. Don't go away.
I'm Becky Johnston, a Sky News correspondent, part of the team based here in the Midlands. Allegations of exploitation in Leicester's clothing factories aren't new. In fact, it's been an open secret in this city for years. Made for people who want clarity in an uncertain world.
We're getting more and more stabbings, and essentially I think it's more and more younger children. As a team, we're not really surprised by anything these days.
So there's reports of a male who's been stabbed repeatedly in the leg.
Here in the diverse industrial heart of England, we hear from people who have real stories to tell.
Parents are going to complain like this, and schools had better get ready for it.
These protests are being organised primarily by people who aren't parents at the school.
So some patients aren't going to survive this.
We have to be prepared that patients will die from this illness.
Staff here are currently identifying wards that could be turned into areas where patients with COVID-19 could be isolated. The River Severn is still rising, and people here in Ironbridge have been told it could go up by another metre before it starts to go back down.
It's going to be a long, slow process of putting it back together again.
We aim to be the best and most trusted place for news.
Slightly minutes, slight better. Fly Emirates, fly better. Thank you.
Welcome back. We're just going to break away from the business news to bring a bit of breaking news. The BBC broadcaster Jeremy Vine has been speaking to the press this morning about the ongoing crisis around an unnamed BBC presenter accused of sending explicit texts. This is what Jeremy Vine's had to say.
It's just terrible. I just think this thing has got to stop. I think I probably said enough, to be honest, but I never, ever want to go through this again. And we're all waiting, you know, we're all just waiting for it to play itself out. So,
what do you think should happen next? Because the scandal just keeps going and going.
I think, do you know what? I'm just going to be like you. I'm just going to wait and see. I've got to go and do my radio show now.
Do you think the person should be named?
They've got to make that decision, but I do think they need to think about it carefully, yeah.
Thank you.
Jeremy Vine sounding very unhappy there. We have some more breaking news to bring you. This concerns a court case that is being heard in the UK Supreme Court. And this was expected potentially to open a flood of litigation against the UK banking sector had the ruling gone the way of the claimant. But it hasn't. I can tell you that Barclays has won a court case this morning. This turned on the extent of the bank's duties to can protect customers from fraudsters. It's called advanced push payment. This is one of the fastest growing areas of fraud right now. It's estimated to have cost customers some £583 million over the last 12 months. And the case in point here concerned a music teacher who was conned by someone, a counterparty in the United Arab Emirates, to the tune of £700,000. Her name was Fiona Phillip. She's a music teacher and a long-term customer of the bank. She sued Barclays in 2020, claiming that she was tricked into sending this money to the UAE. And Barclays claimed that it wasn't responsible for that. The payment systems regulator has looked into this. Now, Fiona Phillip claimed that Barclays owed her a duty to ignore her instructions to transfer that money if they suspected her of being defrauded. But this is what the ruling has said today. This is Supreme Court Judge George Leggett, and he has said this would be inconsistent with first principles of banking law. And he overturned a 2021 Court of Appeal ruling that allowed the case to proceed. And what Mr. Judge Leggett has said is, where the customer has authorised and instructed the bank to make a payment, the bank must carry out the instruction promptly. It is not for the bank to concern itself with the wisdom or risks of its customers' payment decisions. We've got a response here from Barclays. Barclays has said it welcomes the decision that provides certainty and clarity on an issue of law of public importance. I think this is going to be quite a significant ruling, this, because, as I say, this potentially, if this ruling had gone against Barclays, it could have opened the way to a flood of compensation claims from customers to the banks. So a very, very significant ruling there, a big win in the Supreme Court for Barclays. We'll have some reaction to that on our digital platforms in due course. Well, that's it from me for now. We'll get back to the coastal towns later on. I think we had a bit of a problem getting the guest up there. I'm back at 4:30 this afternoon. Hopefully we will have that story for you then. See you later. Thanks for joining me today.